Welcome back to my YouTube channel. Today, I am going to discuss about a very important topic in investment area. This channel brings to you different investment opportunities, be it in the area of stocks, mutual fund, or any asset class. So, looking at the geopolitical situation, I thought it is very relevant as of today, and therefore I am going to bring a asset class and then explore whether it is good to invest in that asset class as of today or no. I'll take help of the historical chart. I'll take help of the report, return on this asset class, also the talk about briefly on the taxation part of it, and finally, at the end of the session, we'll conclude that it makes sense to invest in this asset class. So the topic today is yellow metal. Will it continue glittering? Being an Indian, yellow metal is very close to our heart, particularly the ladies at home, and India has got a huge collection of yellow metal as a household assets, which may not be reported. And as you know, yesterday night, Iran bombarded, sent many missiles, about 181 missiles to be precise, to Israel. Although Israel claims that it intercepted most of them, but there was a damage, and this is going to cascade. And America has already come out publicly and expressed its support to Iran. So is the UK. So in the given situation, is World War going to come? Not sure. May God give them a good wisdom and not go to the World War situation. But one thing is sure, the geopolitical situation worldwide is bad. You have Russia-Ukraine war going on for 2+ years. Now Israel and Middle East getting into, many countries getting into locking condition with each other, which is very disastrous. So in that context, yellow metal, which is always supposed to be safe haven, whenever there is a extraordinary situation worldwide, company, people, countries, they resort to the yellow metal as a safe bet. And as you might know, last fiscal, China has bought 334 metric ton of yellow metal. India got back its reserves from UK to India, and also RBI added significant amount of the gold to its kitty, new gold to the kitty. Gold today is around 75,000 per 10 grams. Does it make sense at this price to add? So I'll look into all the aspects. Before I proceed, I have a point to make to you. Investing in stock or investing is very interesting subject. You need to have some knowledge, and I have brought to you a set of courses which is available at drbishram.graphy.com. You can see in the description of this video as well. And there is a free course. Please do that. If you like the free course, go to the paid course, pay some money, spend about 14-15 hours, and I can guarantee you, you will develop love with investment. And this love is not bad. This love is very helpful because this helps you in creating wealth and also signing your intellect. Because it is not, many people believe that investing is just sort of like gambling. It is not. And unless you study and get into detail, you will not understand this. So let's get going. So I like to bring to you the trend of gold prices. Here what I've done is I have plotted the US dollar gold prices for last 50 years. So in 2019-18, gold prices had got about 636 USD per troy ounce, which is about 28.35 or 28.45 grams. And you will see that for almost 2 decades, it was sort of like very stable. Then there was a sudden spike in 2008 with the recession which happened in the US, and then it all multiplied from 680 to something like 1820. Then there was a down, and again, I think it corrected and then start going up. So here again in 2018, 19, 20, which is COVID time, again it went, and then it has been stable. Now again it started going up. So here, whenever there is a spike, always you see something extraordinary happening. So now here is the case where geopolitical situation is very bad. In fact, still many people believe that although US, there have been a rate cut, but US economy, still the chances could be about 35-40% to get into a recession. And from that perspective, will it make sense to invest in gold? So I personally believe that if the geopolitical situation escalates or US gets into recession, then gold could be a very safe bet for investment. If you look at Indian scenario, last 10 years, so the first gold bond SGB came in 2015, which has just matured some time back. And investment in SGB is, it gives 2.5% interest plus the gold price at the time of redemption. So I think the one who held it for about 8 years, which was the duration of this gold bond, it was 14% tax free, which is fantastic. No equity class will give you. I'm not saying that same thing is going to come in the future, but I think looking at the scenario today, it makes a lot of reason to invest in gold. So now, what are the factors which impact investment in gold? So very first factor, I talk about geopolitical situation. Second thing is inflation, because it becomes a hedge against inflation. Now, as you know, India or any developing economy, on an average 5 to 6% inflation is going to be there. So this is going to go on. So gold will work as a very good hedge. Third is US rupee parity. Here, the rate was stable in the US dollar term. But when you look at the Indian returns, which I'll show you in the PPT in a short while from now, you will see that every year gold has been giving some return. So from where that comes? Even during these years, there was some return. That purely came from inflation in India and US dollar India rupee parity. So just to safeguard your real value in terms of global scenario, gold becomes very important aspect. So from that aspect also, it makes a lot of sense too. And the third and very important factor for India is consumption. India, the festive season is starting. Today is the last day of Shraddha Paksh. So tomorrow onwards, Mahalya or Durga Puja starts. Then after a few days, you have Diwali coming in and a set of festive season. So that normally boosts the gold demand in India. So from that perspective, demand perspective, being safe, beating inflation, saving against rupee dollar parity, and also looking at the geopolitical situation, it makes a lot of sense to invest in gold today. So let us say one has got a portfolio of 100 rupees. So I will say 5 to 10% investment should be in the gold. Now the question comes, what are the different methods of investing in gold? And what we can do for investing in gold. So just to take you around that, I'll take you through a PPT, a small short PPT, yellow metal, which will continue glittering. Here I am going to cover about the return. I'm going to cover about what are the options we have and how we can invest in this yellow metal. So very first thing is, see, this is historical return of gold in India. So except for 2, 3, 4 years, about 6, 7 years negative return in last 30, 40 years time frame, every year they have been. So in this period, the gold price in US dollar was stable. Still it was giving return here. Primarily, as I mentioned to you, due to dollar rupee parity and inflation in India. So if you look from that perspective, it appears quite interesting. So last 1, 2 years, if you look at, gold has given good return. Now question comes, will it continue giving that returns? I showed you in the previous chart. It appears it has a breakout. So, and looking at the situation today, there is a very high chance that this trend will continue. And therefore, it makes a lot of sense to invest in gold. Now, having said so, what are the different options in investing in gold? So here I'll take you through very traditional, and one could be physical gold. Here, minimum one can buy 1 gram. 1 gram is about 7,500 rupees today. So that much if you have, you can buy 1 gram. But here you have its own digital gold. Today there is a e-gold. I will not go into detail, but sites like MMTC, PMP, sites like Paytm and Airtel and many more. You can buy digital gold. Then gold ETF. This is like a stock. And here you can buy and sell at any time on the stock exchange. So if you have a demat account, you can buy ETF gold. And gold beads, which is the Nippon India ETF, very old one, is one of the very important thing. Besides that, other mutual fund house also has got gold funds. Gold mutual funds. Almost all the mutual fund company have got mutual fund that you can buy here. And STB, sovereign gold bond. So government of India brings it from time to time. In a year, at least 4 times it used to bring. So let's see, this year there have been 2 issues so far. So in the third quarter, which is starting, let's say October, December, let's see when it comes. So these are the different options. Now we'll talk about what are the implications of this. So physical gold, as I mentioned to you, at least 1 gram, so 7,500 you have to buy. ETF, technically you can buy from 1 unit, which is about 100 rupees, or sometimes it could be lesser, depending on the different thing. And ETF, you can go on buying and selling. Then you have got sovereign gold bond. Here again, you can invest it approximately, let's say, 1 bond is equivalent to, I think, 1 gram of gold. So basically here also you can buy that. And gold mutual fund, again starting 500 rupees onwards you can invest here. Digital gold starting 1 rupee onwards. Now each one of them had its own challenges. So I'll discuss with you even that. So physical gold, storing becomes a problem. You have matter of theft. When you buy and take it through a proper channel, you have to give your PAN and then you pay GST of about 3% or so. So that's the cost to you. Digital gold also you have to pay GST. And here, personally, I am not very inclined toward digital gold because, you have company like MMTC, PMP, which is a government company, but others are private company. So it's a question of trust. And gold is something where you need to have a lot of trust. Then next one is gold ETF. This is a pretty good thing. And then this comes to your demat account. So no storage. Cost-wise, it is very effective because there could be load of about 0.5 to 1%, which is much better than these two cases where 3% GST you have to pay. And so is the case with the mutual fund. And the best is sovereign gold bond. Here what happens is, it comes, as I mentioned to you, by RBI. Every quarter they have been bringing. So I think third quarter sometime in December type of time frame, they should be out with the gold bond. And here what they do is, whatever money you invest, it remains in your demat account. Plus they pay you 2.5% interest, which is taxable. And if you hold this for 8 years, which is the maturity time of the gold, so whatever price is there of the gold at that time, that money will come back to you at that price. So it's a very safe RBI. But the trouble here is, like, when you look at the riskiness, physical gold, always somebody believe that physical positions, one feel very happy. I normally suggest that out of all these 3 areas, you can concentrate: physical gold, gold ETF, and sovereign gold bond. Now, I personally invest in these 3 categories, and I believe they are much better. So physical gold, it has its own pros and cons of theft, even the purity from the source you buying. So MMTC could be a good source, Tanis could be a good source, but they take little extra on each gold coin or whatever you buy. ETF is very cost effective, and whichever day it is very liquid, so you can log into your stock account and then buy whatever money you have that day. So this you can keep on doing, even SIP type of things here. Sovereign gold bond, you have to wait for the issue to come, and then you can buy from that perspective. So in this short video, what I have discussed today is the yellow metal, will it continue glittering? Answer is yes. Is it the right time to? Now when you look at the geopolitical impending or doubt about the recession in the US, the largest economy, condition of China economy, high chance that you have to safeguard yourself. Therefore, my recommendation normally, which I do in my case, 5 to 10% of your total corpus, which is, let's say, your portfolio, you must put in gold. Now, what are the different ways? I discussed about 5, 6 ways, but 3 ways which I prefer personally. The physical gold gives you mental satisfaction, but don't buy jewelry. I mean, this might make your wife little unhappy. Jewelry should be only for usage purpose, but investment jewelry is a very bad investment. Because what happens is, here you're making charges and then quite a few things. When you go to sell it, you lose money actually. From that perspective, jewelry doesn't make sense. So physical gold in terms of biscuits and coins could be a good option. Secondly, ETF, gold ETF, which you can buy from a reputed, this one, using your stock account. And third is, and sovereign gold bond. Now, SGB also can default when India is defaulting. So you live in India. If country is defaulting, then you have difficulty. So probably that could be good for large, big people who have got huge money. Then they can probably have more. Physical gold has got a issue of storage, theft, and accuracy, and purity. And ETF is also good. So normally, to look from that perspective, you can decide your own proportion in terms of physical ETF and gold bond, and then invest in that area. So friends, I hope you like this short video and deliberation. If you like it, don't forget pressing the like button. Forward this video to your friends and colleagues in different groups so that they can get benefited from this. And if you are not subscribed to the channel, please do subscribe to the channel. Thank you so much for your time. Jai Hind, Jai Bharat.